Good afternoon, everyone. This is Brad Matheny. Today is Monday, the 23rd of June. A lot of people are asking, where's the crush pattern, Brad? You talked about this big crush pattern today. Where was it? Well, obviously, we had a lot of news over the weekend, and the markets did not really crush downward at all. We're still below the highs, which is technically kind of a rollover top. You can see right here, we've got this little bit of a rollover type of a topping formation setting up. And we're going to watch this to see how this plays out. My technical level of 560, 565 is still in play. We have yet to break that level. And I still believe this level, this 565 level, a little higher, 566 level, is critical to any potential breakdown. I keep talking about it here in the videos, talking about how the Fibonacci trigger zones, which are the 0.175 to 0.246 level, as well as the 764 to 385 level, become trigger zones. And you can see that that trigger zone puts us right here, right at the lower end of the gap. So the markets are lining up off of this high very well for a breakdown, potentially moving down into this lower channel area that I've highlighted as a breakdown target. So again, when you get big news, that's something I need you to understand. These patterns are predicted using GANN, Tesla, and Fibonacci structures. Okay. So really, these are not taking into consideration news, not taking into consideration any outlying events. These are predicted all the way out to the end of 2030 right now. I can carry them out to the end of 2050 if I want. But again, these are not correlated to any news or any world events. They are price predictive patterns. That's it. Based on cycles, based on Tesla, based on Fibonacci, and based on GAN theory. So what happened to the crush pattern today? I don't know. It's not here. I think the markets are a little bit in shock. We did have a pretty good move in crude oil. Anybody been following crude oil is going to see this big collapse in crude oil. About $10 move, guys, from the opening price here down here. So looks like, the markets are unwinding some of the fear. I think people are realizing that this Iran conflict may de-escalate as quickly as it escalated. And we're looking at kind of a rolling cycle move here. Very likely we're going to see oil meander back down into some normal channel mode. And again, you can see here coming off of these channels down to here. If we were to fall back into some sort of a common price channel mode, I would say the 62 to 64 area would be the next target. Okay, gold and silver moved a little bit higher today. I mean, opened up quite strong in the morning, rolled down to about 33.70, rolled back up to 34.05, closed over here just below 3,400. Silver kind of just melted upward. Nothing really crazy today. Silver's up 20 cents. Gold is up 570, 580 almost. And we really didn't have any big move. Where was the move? Where was the move in the SPY? It didn't happen. It's just a melt up type of a pattern. And again, I think this is more the markets are kind of in shock, blowing off this conflict, and possibly moving back into a melt up type of trend. We will see. We have to get above this high up here. Okay, we have to get above this upper level in order to try to break above this recent high. So as long as we stay below this 605 roughly level, we are kind of in a rolling topping pattern. But as long as we stay above this 560 to 565 level, we're generally in kind of an uptrend. So I want you to understand that we could roll out of this and roll into kind of a moderate uptrend like this. Or we could have a fairly strong breakdown retargeting this area here. Now, if my cycle patterns are correct and my excess phase peak patterns are correct, the breakdown move has about a 60, maybe 70% chance of happening, where the rally mode would be an invalidation continuation of this solid melt up trend. And we're going to start to see, because we're in the end of June, we've got about a week to go before we end June and move into Q2 earnings. We'll see what those are like. Really, the markets, I talked to you guys about this before, about how I think we're kind of in a 2015-16 kind of a time frame. So if you come back over here and we come back here to 2015-16, I really believe we're kind of in this zone here. So I think we're going to be looking at kind of this kind of a move from this top, rolling down to this deep low, then rolling back up into this failed move. You can see from this low up to this area. Well, let's go to this area. Well, let's just go to this area. You can see where that's at and how similar this move is to where we're at right now. And then you can see this move here, how we rolled up, stalled below the trigger level in this area, rolling up, stalling, and then eventually breaking down into consolidation and then breaking down to the ultimate low. In this case, we set this dual kind of a low right down here. I think under the current setup, we could move, and again, you notice how this moved right into the Christmas time frame. Pay attention here. This is the Christmas zone right in here, January, February. Remember, this was driven by a Fed move, a Fed rate increase. I think we could be looking at something similar, but I think we could be looking at something more along the lines of a breakdown into July, which is what we had back over here, July 18th, roughly. So if I were to highlight it, this would be our breakdown into July right here, followed by a rally, consolidating, followed by a breakdown into October, which would actually be like this, into October, November, consolidating out, and then moving into a rally. That's what I think we're looking at in terms of where the markets are right now. We're technically right up here right now, but I think we shift everything back a little bit, given where we're at. We're post-election. This was an election year. And I think we're looking at this same type of a sideways channel, kind of right across here, and coming right across these lows. Same type of a wedge formation setting up. And I believe that we would be looking at the same setup back over here. Same type of a wedge formation running right, kind of running across here and potentially running across here or here, potentially breaking down, maybe more like this. So I think we are going to roll, but we'll see. I mean, I could be wrong. Remember, I predicted this way back over here in March, February, March, April. I was looking for my video when I started making these rolling cycle trends and predictions. And I believe it was in February when I started making these calls about this rolling trend. But we're going to see how it plays out, guys. We really are. Right now, though, the move in the markets, I think, is shock. I think the US dollar and US dollar based assets continue to be a hedge. I think the move in gold and silver could get pretty explosive over the next 2 or 3 days, maybe longer. And of course, we have Bitcoin, who comes right back over here. Get rid of those. Bitcoin got a nice little bounce as well. We have this really solid setup in the markets overall. This really solid engulfing bearish pattern, double dojis, breakdown into confirmation with a new low. This could be just a a flush out move, a reversion move to the upside here in Bitcoin, potentially rolling back downward. We're going to see how this plays out. So don't get too married to this trade yet. This is my regular SPY chart. There's the incomplete dark cloud cover, the confirmation. This is weekly. If we were to fail at this level and continue to move down below this 586, 585 level, moving that down into this defender level, we could see a very aggressive breakdown, really potentially, you know, moving from here all the way down into this zone here. 510, 515 could become a very aggressive move. And again, in order to get some sort of a resumption of bullish trending, we have to get back above 605. That's the bottom line. We got to get back above 605 in order for us to resume upward trending. If we fail and continue to break down, we are looking at the breakdown potentially extending. If we consolidate and get above 605, then we go bullish again. Really, we're still bullish because we don't have the breakdown mode yet. So we're still bullish, but we've got to get above this 605 in order to extend higher. If we can't, we are in consolidation, in an uptrend, and we will go from there. Okay, guys, just want to give you an update. I know a lot of you are saying, where's the crush pattern, Brad? Well, sometimes this happens. Sometimes news sends the markets into a bit of a roll. In other words, they can do things outside of my patterns, and it's just the way that it is. That's how it happens. Okay, guys, that's it for now. Talk to you later.